Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of bringing on a special guest back on the show, actually, a friend of mine, Steve, the Unemployed Value Degen. How you doing today, Steve?
I'm doing very well, Darrell. Thank you for having me.
Yes, a lot to cover today. We obviously have been in a commodities bull run for a number of months. I mean, a little over a year for many of the metals and such. But I was just actually looking over some of your prior reports on copper and some of the picks that you've outlined for copper and such. And those picks are easily up over 100%. And so I'm curious on the copper sector, how are you feeling? Do you think this is nowhere near the top? I've seen some numbers where we're going to need so much copper for all of these AI data centers, critical minerals, and such. And these copper mines aren't being built as quickly as they should, or permitted as quickly as they should. And so I've been doing some research on that front. And so just curious in your perspective on copper.
Yeah, it's hard for me to know where the metal prices are going to go. It's hard for anyone to know where the metal prices are going to go. I think we're in a commodity super cycle, and it comes from years of underinvestment in extraction. And we saw that with the Nifty 50 in the 60s leading up to this, part of the oil crisis in the 70s. And it comes from a time period where you have interest rates being suppressed and then all the attention going into, well, in the Nifty 50 in the 60s was tech. It was just a different kind of tech. It was things like Xerox and IBM, and that was
Yeah.
the tech of the era. But when all the oxygen gets sucked out of the room and interest rates are low, it's funny. Friedrich Hayek called it both ends pulling against the middle, that the short-term projects get funded and the long-term projects get funded, but the medium term doesn't get funded. And most mines, these exploration projects, they only try to prove about 10 years worth of reserves. So even though a lot of these mines, sometimes the reserves will last for 100 years, mines get funded on a very medium term basis. And I think that's what's happened is, since the global financial crisis in 2008, you had interest rates suppressed and you had all the attention going toward tech. And you have this both ends pulling toward the middle phenomenon. Starbucks gets built out because coffee is instant, right? And these software companies that are only going to have a positive return 15 years from now, they get built out because they're at the long end. But the middle range stuff, and most of that is mining, doesn't get built out. So I don't know where the price of copper is going to go, but I'm happy to buy pretty much any miner right now.
Yeah. Yeah. I mean, it's pretty interesting just looking at I was watching a speech by Robert Freeland. He's CEO of Ivanhoe Electric. Ivanhoe, not CEO of Ivanhoe Electric, but he started Ivanhoe Electric. Ivanhoe Mines, iPulse, and he's a well-known, respected voice in the sector. And he was sharing about his the projects with Ivanhoe Electric and Saudi Arabia and such. And he was just saying, like, we're gonna need, I think I think he mentioned six tier one mines like to come online like yearly, up until the year, I think it was 2050 or something like that. I have to go recheck the numbers and such again, my notes. But that was pretty eye opening for me,
Yeah.
just in terms of like how much of this stuff is needed. And he mentioned how we've all the copper that we've mined from since the dawn of humanity till today, we're going to need that same amount, moving forward, especially with the amount of power that's going to be needed from these data centers, population growth and things of that nature. And we've underinvested in the sector. And that was something that was really like some eye-opening numbers. It's like, okay, I think this copper trade is here going to be here for a while.
Yeah. And I, when something doubles, sometimes you want to take profits, but all the profits I've been taking in mining, I only want to deploy it back into other mines. I want to keep that money in the sector. And But now that most of the metals are moving, it's hard to find things that still feel cheap. But I heard a saying the other day that in a bull market, if you can't emotionally buy something that's already doubled, you're not going to do well in a bull market because it's going to go wild. And I think that's where we're in for copper and a lot of things is the prices have already doubled. And if you can't buy it after it's doubled, you're going to be in trouble.
Yeah, yeah, that's true. That's true. So I do want to just look at a couple of your copper picks. I mean, and this just points to the value of your newsletter on Substack. You all be sure to go subscribe. Unemployed Value Degen. But you had multiple picks. Both, all three of them are up over 100%. One was Hudson Bay. Then you pivoted to Seagull mines and such, and that's up 100%. I think it's still relatively, it hasn't performed as well as Hudson Bay. And remind me the other one that you put in there.
It was ERO in Brazil.
Yeah, ERO in Brazil. And so I think Taseko hasn't performed as well as Hudson Bay and ERO, but I wonder if there's still some opportunity and room to grow there.
Yeah, so my favorite stage of miner is in the build out phase. I don't like to go with the explorers and I don't want to go with the mature producers. I like the ones that are building something out. And Hudbay Minerals, when I first bought them, they had just done an acquisition and they were still getting efficiencies. And normally I look for companies that are founder run, companies with insider buying. And this was the one exception where the CEO was, a professional employee without the insider buying. But he was just took so much pride in his work and he was just so good at being a professional, which I think is rare. To me, that's kind of the exception that proves the rule is that there was one case where I was happy to jump in without insider buying, and that was Hudbay Minerals. But they brought their acquisition into efficiency. They got all their gains. They have another project that they're going to start moving on. It's called Copper World, and they were taking all their capital from production and kind of building up. They wanted to have a certain amount of cash on the sidelines before they pulled the trigger and move forward with it. And then they got a partner to come in and buy, I think, 30% of the project. So a lot of the unknowns for Hudbay Minerals got resolved. All the positive news came in, and the next big catalyst is going to be years and years away. So I rotated that money from Hudbay Minerals to Taseko Mines. Taseko Mines was a little bit smaller. They have one producing mine in Canada, and they're building out their second project in Arizona, and it's already in production. It's mostly finished. I think I forget when they're going to be at full run rate of production, but I think the only reason I can see why the market was reluctant on valuing them appropriately is the copper mine is in situ. And so they pump chemicals into the ground and slurp out the copper, which is it historically, you go back a couple thousand years, that was the first kind of copper mining in China and in Greece. But in the modern world, it's kind of rare just because the geology that works for that, right? It has to be a copper deposit that the rock is really broken up with a lot of air pockets underground. It's just a rare geology. But it's proven historically, and I'm pretty sure they're in operation. They're just in the ramping up phase. So for me, I never saw it as risky as I think the market saw it. And so now that price is coming into line with peers.
Yeah, for sure. Yeah, I think I said Hudson Bay earlier. I think it is Hud Bay. I do want to also cover some of the other metals as well. So you put out a recent report on nickel, and I think it's important to cover nickel because folks are looking for opportunities in this commodities bull market, and they're wondering what's cheap. Obviously, oil and gas is cheap as well, but just curious in nickel.
Yeah, so nickel hasn't the price hasn't popped yet the same way that a lot of other metals have done. So yeah, just the price of nickel, you've got this huge spike in 2022, and it's come way down from there. And this looks kind of the opposite of all the other charts. I mean, every other metal, if you look at copper, it's inflecting upward. If you look at silver, I mean, it's just had a massive spike. And if you look at gold, right, it's all the other metals for the most part, they look like this. They look like they're starting the hockey stick. Now, I think a lot of them still have a lot of room to run. I don't think the hockey stick is over, but just the point is that nickel just hasn't joined the party yet. And the reason that it hasn't joined the party is the production that's coming out of Indonesia. So Indonesia went from making 5% of the world's nickel in 2015 to making 60% of the world's nickel. They're just mining that thing so aggressively, and it's creating a lot of environmental problems. The government of Indonesia is not happy because they crushed the price, and so they're not making as much money as they would have otherwise. I don't like investment theses that require, government in any way. But in this case, you know, at some point, either Indonesia is not going to be able to keep up with the demand on their own, or again, they took this resource in Indonesia. If they were prudent capital allocators, they would have made their resource last 100 years. But they've been mining it so quickly, it's on track to deplete in like 15.
Hmm.
Um, and while they've been crushing the price of nickel, nobody else has been building. So, that might be early. Maybe it'll take a few years for Indonesian production to slow down. But they're already having their grades decrease pretty rapidly. The demand for, and nickel is kind of similar to silver, platinum, and maybe tin, that it has a lot of high tech demands. So that if we've been in this in the US, we've been in a manufacturing recession for 3 years. The manufacturing RSI has been below 50. I think it peaked above for like a month or two, but it's been below 50 pretty much for 3 years. So with falling interest rates and 100% depreciation on equipment, the odds that we're going to get into, an actual industrial boom for the next couple of years is pretty good. And when that happens, people are going to be grabbing all these inputs and finding out there's not enough of some of them. And then China on its own. So China has been absorbing their apartment building bubble, and it's been kind of like their Great Depression. They've pivoted from real estate to manufacturing electric vehicles and other things. But it hasn't been, people are amazed at the speed of the transition because they didn't have bread lines and Hoovervilles like in our Great Depression, but it still has been rough. So an economy, a China that's accelerating and a US that's accelerating, I think would put a lot of strain on a lot of metals. And at some point, I don't think Indonesia is going to be able to keep up with nickel. And this historically, the price of nickel usually is much higher, many multiples of the price of copper. It's the more valuable of the two semi-precious. But Indonesia's just really flooded the market, and they're coming in now and trying to pull back on supply. So whether it happens in 1 year or in 5 years, it's and as much as I said in the beginning of the podcast, if you can't buy something that's doubled, you're going to be in trouble. I'm trying to convince myself because I just find it so hard to buy things that the prices run up, and nickel's one of the only things that hasn't yet. But there
Hmm.
aren't a lot of nickel miners, and the one that I've honed in on has a lot of copper and has some amount of gold and silver and platinum in it. So I like those. I like those lottery tickets where the primary purpose of the mine is nickel, but it's going to benefit from all the other metals rising in price as well.
Yeah, 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 for sure. What are some of the companies that you've looked into regards to nickel? I know I mentioned Lifezone Metals.
Yeah.
They've
Well,
they've been around. I was able to engage with some of them at one of Rick's symposiums. I think it was a couple years ago. Um, but yeah, curious in some of the companies that you've been like looking at because you do this
yeah.
deep research and uh, you know and it's time intensive. That's why I appreciate your newsletter because it's like it like I never really understood like, okay, how much due diligence goes into this? Like, I do due diligence, but the way you're able to go in and find some of these companies and dig into the background of certain things, or if a short report comes out and such, like you're able to pretty
Yeah.
much put up this compelling case to debunk it and such. And so it's levels to this for sure. And so that's why I appreciate your takes on these companies. But what are some of the companies that you've looked into?
Yeah, so nickel's kind of a small space. There's just not a lot to choose from. It has more than tin. I mean, tin you've only got, Alpha Min and Metals X. Let's say there's only two companies, which and then if you don't like either one of them, what are you going to do? But there was, three or four explorers, and there were only I wanted to stay in the developed world because you have this growing split between, the West and the rest, or between the US and the BRICS. So I wanted to stay with more of the US allies for the critical minerals.
Hmm.
Um, but there was an explorer that Rick Rule kind of highlighted as one of his favorite picks. If you have the same investing style he does, that was Centaurus. I looked at Life Zone, I looked at Chalice for the explorers. But I like the producers, and then the producers, there's just so little to choose from. Um, that there was so one of them one of them's pivoting from nickel to lithium. So they're kind of they have one producing nickel mine, but it's scheduled to be decommissioned within a year. And one of them is only into so that's yeah, so Nickel Industries is in Indonesia. Um, I only ended up with two, and there was Sherritt International, which is kind of funny because they're domiciled in Canada, and they have a refinery, and they have a half interest in a nickel mine in Cuba, which I don't even know if you can invest in as an American because of embargoes. But if I think there's good odds that Cuba might be next on the chopping block after Venezuela. You might see a liberated
Yeah.
Cuba. I feel like Trump is really I feel like he's trying to put a ribbon and gift wrap the world for the United States 250th birthday. And so seeing some sort of if he can do a quick and easy regime change in Cuba and take down the embargoes and clear up some of these historical problems, I think there's
Hmm.
pretty good odds of that. So Sherritt International is interesting. They have a refinery in Canada, half interest in a Cuban nickel mine. And because the price of commodities are so low, the Cuban mine pays them in the ore that they refine. And so usually the cobalt is enough to pay for it. But the price of all the commodities have been so low that right now the Cuban mine owns Sherritt, a huge chunk of money. And Sherritt has its own debt. So it's in an interesting situation. But if you like really odd things, there's Sherritt. But the one I've kind of zeroed in on is Magna mining. And that's it's also in Canada. It's around the Sudbury Basin, which is a very historical mining area. It's this huge ancient like 2 billion-year-old asteroid impact crater because all the metals that are heavier than iron came from outer space. So if you want stuff that's heavier than iron, it's from some ancient asteroid, but sometimes, it gets molted down and comes back up through the Earth's crust in liquid form, and you find it in veins in the rocks. But in the Sudbury Basin in Canada, it's this ancient asteroid impact crater, but it's been mined for 100 years. So now you're getting out to kind of sort of the edges of the impact zone, and the grades are lower. But where the grades are lower, what would have been considered too low 100 years from now, is now actually considered a pretty high grade. If you've got a 2% nickel content, and then you throw in some copper, gold, silver, and platinum for good measure to get some credits. It's pretty decent grades now. And one thing is, if it's too much of a greenfield exploration project, what do they call it? Moose pasture, right? You don't have electricity, you don't have skilled labor, you don't have roads, you don't have any of this stuff. But because this has been mined for 100 years, you have incredible infrastructure, right? Your competitors have mills. If you need time to get your own mill going, you can process it through their mills. You've got skilled labor, you've got roads, you've got machines, you've got used machines, you've got mechanics to service machines. So the infrastructure is there. And the CEO of this company, I'm gonna Jason Jessup, he had done something. It was You ever read Robert Kiyosaki's Rich Dad Poor Dad?
Hmm.
His rich dad had stitched together little properties and eventually had a big enough plot that they built a Hilton in Oahu on it. Um, and that's what he's doing here is he's stitching together small properties until they're big enough to where a large miner would say, okay, now it's of interest to us to do a large mining project there. And so you can see the map of what he's acquired sort of in the fringes and the outskirts of this impact crater. And it started to get pretty sizable. But he did the same strategy in 20 teens for very low cost, stitched together all these parcels, ended up selling it for about 1.5 billion. And today, he's stitching together all these parcels. What's interesting about that is sometimes these parcels are owned by the large miners because they acquired a company and they got all their assets, and some of their assets don't make any sense. And in that case, if they get an offer, they are letting these things go for a song. So sometimes these assets come from the large miners, or sometimes there's just some old timer that lives in the area and they don't sell until somebody in the family gets cancer and they need the money. And at that case, they sell it. They like to sell to somebody who's local, somebody who's been there for a while. And the same with so Idaho Strategic Resources is a very similar story. The guy has been in that area for a couple of decades. He knows everybody, and they just don't sell to him until somebody passes away or somebody in the family needs the money or somebody gets cancer. So those are kind of the two ways that these assets change hands. They're either owned by one of the majors or somebody finally sells under pressure. But with Magna Mining, the last earnings call was really interesting because they have one of their properties had a pre-existing mine on it. They were bringing it to production. My favorite stage of mining is the build out phase, but I like it when they're funding the build out with their own profits from mining. And so their Magna Mining is currently in production. And the CEO didn't guide toward it, but he hinted very, very strongly they're going to be free cash flow positive within the next 2 quarters. So again, he didn't come out and make that the official guidance, but it was very much like that Monty Python sketch, wink, wink, nudge, nudge, know what I mean, know what I mean. That within the
Hmm.
next 2 quarters, they're going to be free cash flow positive, and that should pay for the drilling and exploration and all their other properties. And I just, real surface level tried to calculate, okay, with what they own and how far away it is from the center of the impact crater, what kind of grades could they expect? What kind of mineral content, and what would I put that value in the ground? And I think once um, I don't know if they're going to add any more parcels to it, but they very easily could in that area. But with what they own now, once they start taking the free cash flow from their ongoing operations and start drilling some of the land that hasn't been drilled yet, I think they're going to prove reserves that'll make the company able to be sold for somewhere in the neighborhood of $5 billion. But that's going to be a process that takes years of just directing the free cash flow from the producing mine into, drilling more holes and proving more reserves in their other assets.
Hmm. Well, they got the cash to do all of those operations, so that's a good thing. That's a positive. So I know shareholders don't want to get diluted or whatnot.
Yeah.
So I think it's good that they're actually producing. 'Cause I think that's one of the big issues with many of the exploration companies is just, okay, how are you getting the capital? What access to capital do you have? You're not producing or such. So oftentimes they go to market and in many different ways. Sometimes that's shareholder dilution and such, and sometimes you have the exploration companies that have relationships with um, financial firms and lenders that can help finance some of their projects and stuff. And so, yeah, it's definitely good that they have the capital coming in for them to continue that exploration.
Yeah. And
So,
then go ahead.
yeah, I was curious with with nickel. I'm pretty new to like digging into this into nickel. Like, what's their? ounces in the ground. I know gold and silver, we focus on like ounces in the ground. I don't know if nickels is tons or or
So
what.
yeah, let me share this one more time. So this is the properties they've stitched together. So this is this ancient asteroid impact crater called the
Hmm.
Sudbury Basin, which has been mined for over 100 years. And the blue is the properties they've stitched together, and some of them are becoming contiguous to make a more reasonable project. But as
Yeah.
you get further away from that impact crater, the grades are going to be less and less. Um, but again, you've got all the infrastructure, all the roads, all the labor, all the mills around. Only one area, which is I believe it's I could be mistaken if it's McCready West, but only one area is currently in production, and only a handful of areas have the drilling results. So the vast majority of the land doesn't have any drilling results at all yet. So I'm just basing it off of
Hmm.
other companies that have mined here. You start getting a certain distance away
I
from
mean, you
this
got
impact
Glencore
crater.
there.
What kind of grade can you expect? And so I'm making a very, very rough estimate on that. Most of this doesn't have any drilling results at all, but there are a couple. So I think McCready West and Levac both have drilling results. And in those cases, it's very heterogeneous. So some of them they'll have an area where they have a shockingly high platinum content, and some of them they'll have a 4 or 5% copper grade. Some of them will be high in silver. So it's a very heterogeneous
Hmm.
thing, but it's kind of by name it's a nickel deposit. But they did say that they're small and nimble enough that if one metal's price is really disproportionate from the rest, they can focus on mining out certain veins that have higher content in that metal. So
Mm.
and the CEO, I think, deserves the benefit of the doubt to be nimble because he's been pretty nimble in the past. So I think that's a claim that I think is reasonable. But both copper and platinum and gold, they've all gone up. Pretty much everything is spiked except for the nickel. So, and I
Yeah.
I still think at some point Indonesia will stop crushing the price, either because they want to enjoy the benefits of it, or because they can't crush the price anymore, and then nickel will go wild. But yeah, most of their land they don't have drill results on yet. I think the first step was getting their existing because they kind of bought shuttered mines. So the first step was to take these historical mines, get them producing, get them cash flowing, and then use that cash flow to fund the drilling. And so yeah, I'm basing my target value only on distance from the epicenter of this crater and what the grades probably should be. But it's a little bit of a lottery ticket. You don't know until they actually drill.
Hmm. Yeah, yeah, for sure. I mean, it sounds like they got a lot of optionality, especially, with metals prices that have run, and then, nickel may join the party someday and they have an
Yeah.
option there. So, yeah, that seems like they're very diversified.
But if they can hit free cash flow positive with nickel prices being this suppressed, I mean, imagine what they can do. It is still a small operation, but I'm pretty optimistic about it. But it's hard to find any mine that the price hasn't already popped so much. So that's kind of my, where do I put the next dollar in? And I feel pretty good about that because even if this commodity super cycle wasn't in high gear right now, I feel like Jason Jessup is going to do a good job with this thing over the next 5 years. And then for the things that are going right now, like I've got my Sibanye Stillwater. I'm holding on. It's going
Hmm.
wild. I've got my
Yeah, it
Taseko
is.
mines. I'm holding on. I think that one is gonna in the next year or so be up to full production. That should prove to everyone that in-situ copper is still a real thing. But yeah, I'm not selling. I just where I want to put my marginal dollar. If I have a little bit of cash, what I want to buy today, and it's tough out there. It's a tough decision.
Hmm. Yeah, for sure. So, I do want to cover rare earths as well. I've been doing some research, just what's going on with Greenland, and so from the research that I've done, to my understanding, China and Russia has built a huge influence in the Arctic Ocean, and a lot of this occurred under the Obama administration. There was a lot of focus on climate change and governance, while China and Russia were building, military bases and such over in the Arctic Ocean. And Norway was sending, warnings about this, and this was hugely being ignored and such. And so, and then that brings us to like Greenland, because I think Trump mentioned Greenland being critical in this particular situation. And so, just thinking about that, and then also thinking about rare earths, because we did give away a lot of our production of rare earths and refining and such, because of the whether it's environmentally friendly or whatever the case may be. I mean, having access to like a Greenland, I could see like, okay, could there be refinery plants there, where these metals can be refined over there, as such. And so, I've been thinking about rare earths in that context, and so just curious if you have any thoughts there.
Yeah, so rare earths, uh, and this also gets into a similar story with a company like ASP Isotopes, that there's all these things that were used in industry, very niche cases, but we use so little of it, we could get most of it as byproduct, right? If you needed some like carbon 13, or you needed some gallium or germanium, you could get things like that, kind of as the scrapings at the bottom of the smelter from other processes. But as high tech industry gets so advanced and has such large volumes, all of these less common metals, all of these less common isotopes, the demand starts outpacing what you can get from byproduct. And you're going to have to actually build out sort of virgin mines for things that people haven't mined for before. And it's almost impossible to know which one or which two are going to be, a bottleneck, or going to fetch enormous prices. So right now, people are kind of filling the bingo card. And these rare earths, sometimes you'll have a bundle of them in the deposit. Because I like this with Idaho Strategic, which I mentioned previously, where they have their producing gold mine, and they use the cash flow from the producing gold mine to prove and to also acquire more land and to prove minerals of other things. They have, I think, definitively the US's largest proven rare earth reserve. Um, but one of the problems there is, even though it has lots of rare earths, not all rare earths are fetching a high market price right now. So you've got these heavy rare earths that are used in magnets. And these permanent magnets, they're really important for, electric vehicle motors, and they were really important for windmills. But fortunately, we're kind of pulling away from windmills a little bit. Uh, there's there's other so one company. So I'd made a strategy um about a year and a half ago, which was called, rare earths as a lottery ticket. Companies that were, producing, they were doing something else, but they had rare earths as a lottery ticket. I didn't want to go out and buy something that was being valued off of rare earths. And so one of those was Energy Fuels, where they have this uranium processing mill, but they had been setting up all these contracts to bring in monazite, which is sort of a mining byproduct ore. But because Energy Fuels processes uranium, they have the ability to get the uranium out of the ore. One of the problems with rare earths is a lot of times it's very expensive to process because it comes with, radioactive materials. So the White Mesa mill for Energy Fuels and their contracts to get these monazite supply chain was pretty good for the long term, and the markets rewarded them. Same with Idaho Strategic; they're producing gold mine, but they have all this other rare earth deposit. The third was Ramaco Resources. They have a coke and coal mine, but they also have a thermal coal deposit that's heavy in a bunch of rare earths and critical minerals. And their critical minerals, they're sort of uh, it's kind of a unique blend. So a lot of the rare earths, they're looking for, the heavy magnetic ones. The one Ramaco Resources, which is the picture in the background, was sort of their grand opening ceremony. Although they're not, it was kind of opened ceremoniously, but they're not actually mining right now yet. Um, their big content is germanium, gallium, and scandium. And so they got popular when China sort of banned exports or heavily restricted exports of germanium and gallium. And again, the question is, it's hard to know where the bottlenecks are going to be and which element is going to pop. But what's really interesting about the Ramaco Resources deposit, um, and you can see the picture behind me. It's a thermal coal mine. So you have those seams of thermal coal going through the ground. The critical minerals are kind of in a thin layer on the top and bottom of the thermal coal. So they kind of need to operate as a thermal coal mine, and then they get the rare earths as a bonus. But the heaviest concentration economically for them is this element called scandium. And have you ever seen, when I was younger, when I was first getting into the stock market, there were these television commercials on late night for, I think it was American Molly for molybdenum. I think they've long since gone bankrupt, but I remember all these commercials for molybdenum. So what the heck is molybdenum used for? And molybdenum, it strengthens steel. So you can get away with using less of the steel. You know, it's stronger, lighter weight for the same strength. Scandium does the same thing for aluminum, right? It makes the aluminum stronger. So, if they can imagine Boeing, that if they buy a certain amount of scandium, that their airplanes could use 40% less aluminum and be 25% lighter. And then that means they could carry less jet fuel and they could have all these fuel savings. So, where we have this push towards humanoid robots and drone swarms and, just the general explosion in aviation as the world becomes wealthy enough so that everybody can travel. I think the odds that the price of scandium re-rates and Ramaco Resources actually builds out this mine and becomes a huge scandium producer, I think those odds are pretty good. So on the rare earth side, I still have my Idaho Strategic, I still have my Energy Fuels, but I've been adding to Ramaco Resources because I think the odds are getting closer and closer to them actually starting production at this Brook deposit because the math works out. I spent some time once upon a time I was a chemical engineering student, so I spent some time doing the math. How much is this going to save in jet fuel? And right now, energy prices are low. At some point in this commodities bull run, energy is going to participate at some point. So if you have jet fuel at $5 a gallon instead of $2 a gallon, it makes the calculation very, very different. But
Mhm.
um, Ramaco Resources put out a feasibility pre-study, which had them selling scandium for I think $3.5 million a ton for scandium ore, which is currently higher than spot price in China. But again, you're not going to be able to get spot price in China because they're not going to sell it to Americans anyway. But even at $3.5 million a ton for Ramaco Resources selling the scandium ore, at today's price of jet fuel, that would be an 18-month payback period if Boeing incorporated that in their jets. And if jet fuel is $5 a gallon, it's like a 7, 8, 9, 10-month payback period. So, and when you have this competition between Boeing and Airbus, whose planes are now 25% lighter and using 25% less gas and things like that. So I think the odds that Ramaco Resources can build out this deposit and start selling their scandium, all it's going to take is Boeing to sign a contract saying, okay, we'll buy X amount for the next 15 years, and then they can go ahead and start production. So I think this is sort of the rare earth lottery ticket that I've been leaning on more heavily recently. The price it's one of those things where the price has doubled since I first looked at Ramaco Resources, but I think the odds are really good that it comes into production. And then if you just look at if you value the whole company just on coke and coal, and I think they're currently doing a run rate of about 3.5 million short tons a year. If for $100 million, they can double that. They'll be at a 7 million ton run rate. And I compare that with the price of Warrior met coal, which is still cheap. I think they both have room to go. But Ramaco Resources even cheap just on their existing coke and coal mine. So I still feel like I'm getting the rare earth as a lottery ticket as a bonus for free.
Okay, got it, got it. Yeah, that makes sense. So okay, so Ramaco, they have this pretty much byproduct of their coal industry work. They have these rare earths, and Um, and so you're pretty much betting on like, okay, they're going to be able to sell these rare earths
Yeah.
um, at a
So
premium later on.
it is a bold statement. I mean, there was a short report. It's reasonable to be skeptical, right? I mean,
Yeah.
Wyoming has not built a thermal coal mine in 50 years. And thermal coal has been on the decline in the US, pretty significantly. But I think the Overton window is shifting and it's like they don't want to talk about it. They don't want to admit it. But carbon dioxide was never really a pollutant. It was just, China trying to undermine Western economic strength. So it hasn't quite gotten there yet, but I think one of these days we're going to wake up and realize carbon dioxide is plant food. This has a totally benign impact on the planet. And if you look at carbon dioxide concentrations historically in the planet for hundreds of millions of years, the times when carbon dioxide concentrations were the highest in the atmosphere, that's the time when you had, megafauna and megaflora. You had the dinosaurs roaming the earth. I mean, you can have lush rainforests with huge carbon dioxide concentrations. So the idea that this was being responsible for warming, I think the Overton window is going to shift and people are going to realize this was all Chinese propaganda meant to weaken us, to get us to waste all of our time building these floating windmills, which are absurd. And it worked on Germany. I mean, it's deindustrialized Germany. So
Yeah.
China was very successful at their propaganda campaign. But the US still is not building new thermal coal plants, thermal coal mines yet. So I don't know how long it's going to take that Overton window to shift. So it is a bit of a leap of faith to say, okay, they're going to build out Wyoming's first thermal coal mine in 50 years. But with artificial intelligence needing so much power, one of my best performing picks has been this steam boiler maker, this 160-year-old company, Babcock and Wilcox,
Hmm.
because the idea was we're going to need every bit of electricity we can get our hands on. And that's going to require an everything solution. You're going to need every source of electricity. And that includes, so far they've been trying to lean heavily on natural gas because natural gas is considered cleaner because it generates less carbon dioxide per megawatt, but it's still a fossil fuel. Um, and GE Vernova is not expanding capacity into this. They're not enough. They're still telling people it's a 5-year wait list. So now people are trying to figure out, well, can I use, I mean, you've got a huge boom in demand for, Caterpillar's diesel generators, just,
Hmm.
reciprocating generators. The reciprocating generators are using a car engine to generate electricity. Like that's insane. But GE Vernova is not expanding capacity to this. Well, Babcock and Wilcox makes steam boilers, which are still used for nuclear, but they don't make the nuclear ones. BWXT is the spinoff from Babcock and Wilcox to do the nuclear steam boilers. They do other things now too, and as a defense contractor, the stock price is through the moon. But
Yeah, it
steam
is.
boilers are still used for coal electricity, and they're still used for the natural gas that's not used for baseload, but it's used for backup. So if you've got an area with a lot of solar and you have a natural gas plant that's only going to turn on, at night when the sun is down, that still might be a steam boiler plant. But I thought that there would have been some coal restarts by now. I thought there would have been, and there, it's kind of amazing. It's been a year and a half since Microsoft did a purchasing order to restart 3 Mile Island. And in that year and a half, there hasn't been the announcement of a new build nuclear plant. And I haven't seen any announcements of any coal restarts. So Silicon Valley needs all this electricity for their data centers, which is still accelerating. I mean, they still want to. Earlier in 2025, they were projecting 400 billion in capex, and then in Q3 they updated that to 600 billion in capex on data centers. So the energy demand is still accelerating, and nobody's swallowed the medicine to say, well, I guess we're going to have to build our data center near a coal plant. And if the data center build out doesn't slow down, I think at some point that's inevitable. I think at some point you have this collision where they just need electricity so badly, they're going to have to say, okay, we'll do coal for 10 years until we can build out nuclear next to it instead. Because the ability to do natural gas for everything isn't there. Just the companies that make these natural gas turbines. I mean, you've got people trying to use old jet engines, Caterpillars,
They try to use everything,
reciprocating
huh?
car engines, diesel backup generators. They just, at some point, the answer is staring them in the face. That's the United States has enough thermal coal to last them 150 years. And, um, if carbon dioxide isn't what everybody thought it was for a while, as far as all the other stuff that comes out of coal, they're pretty good with scrubbers on the smokestacks. They're pretty good at keeping the sulfur out. They're pretty good at keeping the particles out. If aside from carbon dioxide, it can be done in a relatively clean way. So if carbon dioxide and the whole environmentalist global warming thing disappeared from the news immediately as soon as Silicon Valley wanted to make their new Tower of Babel and they want to go meet their new super
They
intelligence.
pivoted quick.
Yeah.
Yeah.
But I think, one of Trump's big things is trying to wake everybody up to the idea that, look, we are in a Cold War. China has a total war aspect toward the United States. We see that here in Florida. Florida's entire citrus industry has been destroyed because of a virus that got imported from China. And it's just, you see these news articles over and over again. Chinese PhD student in Minnesota tried to smuggle in some fungus that will destroy XYZ crop. Like, they are actively engaged in a war to destroy us. And I think as people wake up to that idea, they realize, oh, all this propaganda about carbon dioxide and windmills, that was highly effective Chinese propaganda to weaken us, and it worked against Germany. Unfortunately, the United States is confederated enough that it only worked. There were only a few states that went crazy on these floating windmills.
Mm.
But maybe that Overton window is going to shift at some point because, that's the state of the world now. You've got China trying to destroy our crops, China, and um, evidence is out. So remember 20 years ago when people were talking about banning fracking? Well, many countries in the EU did ban fracking. Come to find out, those advertising campaigns were paid for by Gazprom, right? Gazprom was funding these campaigns to get the EU to ban fracking, and they
Yeah, and
weakened
that's
themselves. They
Russian.
imported Russian energy. Um, so we'll see if that Overton window shifts, but I think the odds are pretty good that at some point, if in 2 years AI build out is accelerating, I don't think there's any other sources of electricity for them in the short term other than coal and coal restarts. So we'll see. But yeah, I think it is a bit of a leap to say that Ramaco is gonna build out the first new thermal coal mine in Wyoming in 50 years. But I think they're actually going to do it.
Hmm. What's your take on? There's a chart going around. I think I just shared it on X as well. With China's electricity generation,
Yeah.
like being significant. Like, I mean, you look at the chart and just like it's like astronomical compared to like Europe and the US and such. And so, I could see like the focus being like, okay, we need more power. Just curious and what you think on that.
Well, I mean, for what, absolutely. I mean, they know that there are no rich, energy poor countries, right? I mean, your cost of electricity goes into everything. The United States has had, energy efficiencies, and we've had offshoring of manufacturing for 20 years. So we haven't expanded electricity capacity in 20 years. So it is a bit of a, trying to start a cold engine. But we still are capable of building things. So, once you get past, if you don't have a situation where the Environmental Protection Agency is actively trying to kill your business, once you get past that mentality, we can build stuff pretty quickly. There's
Hmm.
this idea that nuclear is really expensive because the Vogtle plant in Georgia bankrupted Westinghouse. I mean, Cameco was able to come in and buy half of Westinghouse because the regulators come in capriciously and say, well, we don't like this, so redo it. And you do that enough times, and a $3 billion project turns into an $11 billion project. But the South Koreans are able to deliver nuclear plants in other countries for a third of the price and a third of the time that it took to do Vogtle in Georgia. And the difference, it's not that you're cutting quality standards, not you're cutting safety standards. It's just if the regulator is not actively trying to kill your business. And so I think, but if you're a business person in the US, well, now you have to make a bet. You know, what happens if the Democrats come back into power? What happens if the Democrats retake the House? What happens if the Democrats retake the presidency? If it takes me 3 or 4 years to build out a new build nuclear plant, assuming the regulator is cooperative, am I going to put myself in Westinghouse's position and just be a lamb for the slaughter? So I think this heavy-handed back and forth between the political parties in the U.S. is going to cause a good bit of paralysis. So maybe some of that'll unthaw. Right now, I think the gambling markets have the Democrats retaking the House in the midterms. So if Trump is able to manage a bit of an upset and sort of solidify his strength, and if J.D. Vance is polling better than Gavin Newsom, maybe in the US, people can take a leap of faith and actually deploy long-term capital projects in areas that the Democrats are known to want to kill. But I think the business community needs some assurance that they're not just going to be destroyed if the wrong party takes power. And that's unfortunate because it means the United States has lost rule of law. I mean, rule of law means um, that the rules are predictable. The rules don't change on you after the fact. You get grandfather clauses, you get
Hmm.
long-term assurances, and that's really unfortunate. And if at the national level, if they're so heavy-handed, they can come in and even upset state things. One of the reasons Texas has been able to, manage their energy resources so well is because it's a large state, and to a certain extent, they can tell the feds to go away and stop bothering them. But the national government does have the power to be heavy-handed enough to come into your state. Like for example, banning flaring. Well, that dramatically changes the economics of the Bakken because the Bakken in North Dakota, they just don't have the infrastructure to get the natural gas out of there. So that's it wasn't enough to slow down the Permian, but it does have a big impact on the Bakken. So we'll have to
Hmm.
see how the midterms go. But the with Silicon Valley behind it, the amount of political clout that the tech billionaires have through, and also through all of their media, once all of Silicon Valley is behind something, and right now all of Silicon Valley is behind, we need electricity for AI. And it doesn't matter if you're, Reid Hoffman at LinkedIn or you're Elon Musk at Twitter. It's the same story. Right now, electricity is good. So I think if the Democrats beat the drum of being anti-carbon dioxide so much, I think they're gonna run into some trouble in getting their perspective on certain news channels, things like that. So you see it.
Yeah,
I saw
the
somebody
pockets
the
might
other
not
day.
get filled.
You can already tell that. So
You know?
Sherlock Holmes has that story about the dog that isn't barking, and even social media accounts like Alexandria Ocasio-Cortez has not mentioned global warming in a year, right? That dog is not barking. So I think that stuff is over. So we'll see if energy has a rebound, either because the Republicans gain ground in the midterms or because, people wake up and realize if Silicon Valley is behind you, maybe the first big tech company has to have a coal project. Maybe Amazon has to say, hey, we would love to do nuclear, but we need electricity now, so we're going to do a coal restart. And maybe that kind of breaks open the dam. We'll see what happens.
Yeah, yeah, that'll definitely be interesting. Okay, well, Steve, appreciate you coming on the show and everything. Where can people subscribe to your work? I mean, like I mentioned earlier, you go into many different sectors. For me, I'm more in gold and silver and such, and then you're going into like the rare earths. You're going into fintech. You're going into consumer staples and such. Like you're diving into many different sectors of stocks, and business models and such. And so, where can people connect with you and everything where they can access this value?
Yep. So I've got the Unemployed Value Degen on Substack. And then you can also find me on Twitter, but most of Twitter, I'm just posting links to my Substack articles. And I, try and put out a few articles a week. And I've been doing a weekly video where I talk about trying to combine some fundamentals and technicals and see, okay, what there's all these undervalued things, but which one has a chart that looks good to buy to put money into this week? And so that's been getting, I think, some good feedback and some good traction because I've caught a lot of falling knives and I got tired of catching falling knives. I want to try and start deploying capital in good businesses with good leadership and good fundamentals, but the charts are also starting to turn up.
Got it. I'm curious, how many stocks do you have? How many stocks in your portfolio?
I've got about maybe 30 or 35, but
30,
half of them
35.
are things that are on a watch list. My best watch list is in the portfolio with, a few $100s invested in it so that I pay attention to it closely. I've
Hmm.
tried to have a separate watch list and it just doesn't work. The thing I look at all the time is the portfolio. So maybe I have about 15 to 20 positions that are sizable, maybe another 10 or 15 that are kind of on the watch list waiting for the price to stop falling.
Gotcha. Yeah, because I've been thinking about that too. I mean, because you have like your speculation plays, because sometimes you'll find like I'll read your newsletter and you'll find like a gem, like a diamond in the rough, and so I'll deploy some capital there. After reading your write up on it and then doing some further research.
One thing that's gotten a lot of traction recently because Staples started performing this year. So I've written about two Staples company recently. So Nomad is fish fingers in Europe, and Utz is the potato chip bags in your gas station. And both of them had pretty interesting setups. But I try and pay attention to which sectors are performing for the year because a lot of times with momentum factors and long short funds, one sector will perform for the whole year. And then you'll get a big upset where, it'll sell off either in November, December, or January and have new market leadership. So try and try and cover enough bases, be diversified. My only limit is circle of competence. And my big wall in consumer in circle of competence is things like B2B software, software as a service, all that stuff. Sometimes even if it's tech, if it's physical tech, I can kind of understand it, but software is sort of a good luck situation. So I try and try and stick to my circle of competence, which is small but growing.
Yeah, yeah. I mean, I remember when Dollar Tree and Dollar General were just getting pummeled, and you mostly focus on the smaller caps, but you were like, hey, these at these levels
Yeah.
are very attractive. And so I went in and bought some Dollar Tree. It was funny. I was taking my kids, like, hey, we're gonna go to Dollar Tree. We're gonna support. I was like,
That's your Peter Lynch, Peter Lynch due diligence. Go to the store. Yeah, I've never
yeah,
seen a
for sure.
Dollar Tree where there wasn't a line at the checkout register. I mean, it's just
Yeah.
amazing how busy those places are.
Yeah, yeah, for sure. I was telling my kids, like, yeah, we own Dollar Tree stock. We're going to Dollar Tree. Like, trying to do my little mini Warren Buffett, will probably be smaller than that. but
Yeah.
but it was fun. And since then I've like sold. I mean, it's the stock is, rebounded significantly since then, but it was definitely a good pickup. So you're obviously looking at the large caps. Sometimes large cap sells off, and then you may see a write up from Steve like, hey, I'm not focused on large caps or mid caps, but this looks very attractive, and so I always appreciate that too.
Yeah, and I've got an old write-up on Cleveland Cliffs, and I think when I wrote about them, they were like $9. Now they're $13. But if we're hitting this world where, again, it's a global interest rate cutting cycle, except for Japan, but they've been the odd man out for interest rates. But if you have China, returning to economic growth, if you've got the U.S., about to boom, that if the commodity super cycle starts going from I think it's precious metals first, you got gold first, and then, platinum and silver, then you go semi-precious, copper and maybe nickel. But if it rotates into the base metals, there are not a lot of small cap base metal miners because the mines are just so enormous. But you've got Cleveland Cliffs is vertically integrated all the way down to the 5 iron mines. And then, I think that's my next project is trying to find aluminum and iron exposure. If the commodity super cycle goes from sort of precious to semi-precious to base metals. But yeah, I'm keeping my eye on Cleveland Cliffs now because I think there's odds that if we're and this is kind of the meme that we're going to run it hot. Well, if we're going to run it hot, that means actually moving real physical stuff in the economy, and I think that could be coming next.
Yeah, yeah, for sure. Well, appreciate you for coming on the show. You all be sure to go check out Unemployed Value Degen on Substack as well as X. He's on X as well, so he's there terrorizing people on X. So appreciate you for coming on on the show, Steve.
I try to not be too rude on X. I try to be polite. You know how many times I've typed out a angry paragraph and then said, "Yeah, oh, this is my professional account. This is for a business," and then just deleted it. But
you
it
may,
must
you
be
may
a
need to create
hundred
a create
times.
a spy account or something, man.
I need a burner account so I can roast people. But no, I try to be polite on Twitter.
That's good. That's good. We need more of that. All righty, well, take care.
All right. Thank you, Darrell.